All right. Hey guys, we are going to take a look at a few instruments through the lens of Elliott wave theory. We're going to look at crude oil, the metals, NASDAQ, and the dollar. All right, let's dive into the crude oil chart first. So here is the daily chart of crude oil. We've been looking at this zone in yellow going back almost a week now, and started seeing some rejection up there. Came up a little bit more, got to the top of this box. The wick came up to the 886, almost touching the 1618 extension of this AB, which is still reasonable for a topping area. ABC, did this get a little long? Yeah, sure it did. But the idea is that crude oil is bearish. This, by the way, is the February contract on the NYMEX data feed. And so now it had a chance to lose it right here, but it didn't. It came up. So we had considered that. And if you're inside the Professor Trades Club, we adjust as new information, new price information comes in, we adjust. Same thing with Elliott wave theory, you adjust. All right, that's the daily chart. Now here you can really see this massive red, well, it's two massive, the twin towers of red. Look at this. This kind of surprised me. It made a new high, but it wicked it. And I was nimble enough to catch these shorts again, even after getting a little chopped up over here. Had a fantastic short trade. If you're inside of the Professor Trades Club, you would know that I posted this chart early in the morning. And sure enough, here we are down to the 1618, which is the typical target that I look to take off my whatever longs or shorts, depending on where it's headed. When I see the 1618, I almost always take gains there. And that's what I did. I actually used a trailing stop because I didn't want to take it all off. So I left a little position on. So with a wide trailing stop, just in case this wants to come down a little further. The way I'm viewing this is as a three-wave move down. So that allows me to have some pretty decent parameters. Whenever this finishes going down, I'm not entirely convinced that it hasn't finished going down, but this makes sense that this is where a wave 3 terminates. So I'm not doing anything from down here. What I would rather do is see if this can come up overnight and give 3 waves, maybe something like this. This is just speculative. A, B, C, something up into this box, selling anywhere in here, maybe taking some scalps down, or even for potential swing trade in a 5th wave. And one of the ways, it's speculative right now. Let me be clear about this. I'm about to do a speculative ratio box just to see where might the 5th wave be expected to terminate. Now, I already have, see these white fibs right here? This is where I would expect a 5th wave to terminate if it can bounce first. Now, if it comes down directly, it's still debatable, but if this comes down directly, I'll consider this a continuation of the 3rd wave, and then the next bounce I will consider as a wave 4. But ideally, this doesn't make a new low here. It bounces overnight and then gets rejected. So just for the sake of this little speculative exercise I'm doing, let's say overnight price came up to this blue 50% fib. I will consider that a wave 4. If that is the case, then I would look for a ratio box to give me some guidance about, and look at that. So now this is speculative because I don't know what's going to happen here. I'm just saying if it doesn't make a new low, and just for simplicity's sake, if I just put a line there, and I'll make it subtle. So that's 73.16 on the February futures contract. If this doesn't make a new low there, an overnight tonight can come up into the Europe session and get up into this blue zone, ideally up in here. I also just like it because there's a liquidity over here. Now, this is only an 8-minute chart, but you can tell from even, look at where 74.03, which is the 50% fib in blue. Let's see what that looks like on the 4-hour chart. 74.03 gets you up into this candle. So you know how the professor has taught us to come look for liquidity. Now this candle here They came up and grabbed all of it and then some and wicked it above just to stop out anybody who was thinking about getting short. But that's okay. You can do that. I'm going to just short it again. That's what I did. That's what this sell box is all about, is to remind myself this is where I was looking for a B wave top. Well, really, it's this gray box. Anywhere in here is ideal for a B wave top. So we got lucky and sold it twice. Actually, we sold it. We made some of these longs, and we sold it again. So thank you, Armando and the Professor Trades Club. And then also my Elliott wave parameters are giving us more exacting levels to look at. So that's the deal. So let me give you a parameter. The first warning to shorts is if price gets above 74.26. If price gets above 74.26, the best you could expect now is a diagonal down because this would have created overlap with wave one. Let me just put the labels on here so you can see what I'm talking about. 1, 2, 3, 4. And how cool would it be if this bottoms, if it happens quicker, that would be awesome. Because then you could have a bullish morning session. But, that's just speculation on my part. Who cares? Let's just see what this does. Usually doesn't wake up until around 9:30. And then if it actually, this could, or maybe it could have it reverse. Well, they like to alternate sessions. So if this was a bearish session, then maybe the European session is a bullish session. And then tomorrow you get another bearish session, 2 bearish New York sessions in a row. Well, I'll tell you another way to think of this. I use a timing fib thing where I put this on the beginning of wave 2. And then you put it on the bottom of wave 3. Now, again, this is speculative because I don't even know if wave 3 is really bottomed or not. But if it has, let me just move this over, 73.16. There's some guidance here in this timing. Now, it's not the best guidance in the world because timing is extremely difficult. But the idea would be, if this really is the bottom of wave 3, then we do not want to see price come up and get above 74.26. I mean, if this is going to be a legit impulse on the way down, then we do not want to see price get above 74.26. So, and if it gets above 74.26 in the middle of the night over here, then it's just not an impulse anymore. That invalidates this. So what I would love to see is this, just like I got it drawn up here. But, it's not up to me. I'm just showing you ideals based on LA wave. So if this can come up in 3 waves correctively into this sell box overnight, and then wouldn't it be awesome if it's still kind of holding up here but giving us a nice setup to catch this ride down again? Who knows? This also, now that I think about it, looks like a head and shoulders pattern, needing another shoulder over here. Now, that is crude oil. So an actionable level, 74.26 is your first warning to bears. It's not a headshot, but it's just a warning. But man, if price comes up above 74.91, then I think this is the low, and we're just going to go higher. And I don't really want to talk about that right now because honestly, I've been bearish. This is the perfect place to see this kind of rejection. So really what we want to see now is to finish a legit 5-wave move down, which means we need a wave 4 and a wave 5. Then what we'll get is a larger correction and then play the same game again. So this is fun because if this finally gives us sort of a standard impulse, we are in business to catch a massive short trade in wave 3 of C. But we're not there yet. It's probably not going to happen. If it does happen at all, it probably won't happen until late next week. So anyway, there's the parameters. Parameters to the downside. If this comes directly down, I would consider it a wave 3, unless it just keeps coming. This would be a wildly small wave 4. Sometimes a wave 4 could play out in time rather than price. So if this just completely went sideways all night in the European session, that burning of the clock could count as a wave 4 rather than the price coming up where you would think a wave 4 would come. It could just burn the time off the clock, which I've seen as a substitute for price giving a wave 4. You can get a wave 4 in time. Then it can still cough up the low. That I hate that because it's less clear. Ideally, when it follows the ideals, man, you get a really nice confident feeling when it comes to Elliott wave. When it tracks like a standard impulse, there are moments where you just really feel like you know what's going to happen. And that's when I lean into the size a little bit. Still using these parameters, okay? So, the ideal low, based on the way I have this set up right now, if it comes up into here, is to come down into this zone. Not really much below 72.43. But that's only if it makes it up to 74.03. So we're going to adjust that. Whenever this tops out, if it does, and I'll adjust the target down low. See, that's sometimes people give me grief for changing my charts. Oh, you just changed the labels. Well, yeah, because when you get more price information, then I'm taking a different measurement, and it's actually more exacting. Like this wave 3, how good was this wave 3? From up here, once this topped up here and started coming down, boom, I put the tool on there, and this is what I came up with. And that's where price went. And it doesn't happen like that all the time. Of course not. But at least you have parameters. Okay? So, ba-da-ba. Talk too much. Let's keep it moving with the parameters. Let's move on to... Actually, let's do the dollar first. As I was mentioning, if this wants to extend over here, I was saying I prefer that it extends. And maybe that would help metals get a little bit of a smackdown or at least stop going higher because my bias in metals is to see lower. So this is now shaping up like a potential impulse. So I'm counting, let me put the labels on here, but I'm counting this as 3 up, like this, 3, and then we're getting a wave 4 now, and then ideally, the way I'm looking at this now, this would come up and just come up into the top higher side of this zone, which is a ratio box of this larger degree, having this be a larger degree wave 3, this being a wave 4, and then now we're getting wave 5, a 5th wave up. Wouldn't that be cool if that just comes up? Let me see what fib, let me see what white fib extends. Looks like the 2618 would be reasonable. Yeah, 2618. So that's what I'm looking at. Potential for the dollar to somewhere catch support down here, not to get down into this pivot, although that's fine if it does. You don't want to see it really, you don't want to see it come down too much really below 108,489. That's a parameter to the downside. Don't want to see below 108,489 if you're going to, in a clean manner, get another wave up coming up into here. Now, if I'm wrong and this is something else more bullish, yikes. There is the potential. There are other fibs up here. So one of the clues that we look for is the first, one clue at a time. The first clue is, where does this bottom? It needs to bottom somewhere between right here and down here to 108,489. And so my preference is that this comes down, rattles around overnight down here, and then in tomorrow's session and into Friday, we're cleaning this up into this higher zone somewhere up here, call it just towards 110. All right, so that's a dollar. So now let's actually, before I move on from the dollar, let's just get our context looking at the weekly dollar chart. What we're really tracking is this larger B wave, because what we really need, this whole structure is a 1, 2, 1, 2, 3, 4. We're in a diagonal. Yeah, this is wave 4. We're looking for a massive smackdown in the dollar. So but before we can look for a massive smackdown in the dollar, we have to see that type of structure on the lower time frame, which I just showed you. So those crazy extensions that look so wild over here on this little 1 hour chart, like for example, just take 111 and then the ultimate extension all the way up here, 113. So just remember 111 and 113, how crazy it looks on the 1 hour chart. But on the weekly chart, look at where 111 is and 113. This would just, this would be a massive extension for this B wave, but it's no reason that can't happen. The fibs are there. So what we're going to do, the clues we're going to look for on the dollar is if this holds support here, what kind of reaction does it get up here? Because what it should do, if this is the top, it should get a massive smackdown, kind of like this kind of reaction. Something like that should happen over here, with, probably next week sometime. If it catches bids and just starts ripping and plows through this resistance and doesn't get any resistance until up here, that's going to be the next clue. So that's my thinking, is if it breaks through this resistance right in this area right here, then the next area of resistance is going to be up here. Just call it 110, 800, somewhere. But we're one step at a time. But I'm just sharing with you the ideas that we're trading based on Fibonacci levels on all time frames. All right. Okay, cool. Now, this is a good place just to take this moment to shout out to my buddy Armando inside of the Professor Trades Club. The link to his club is in the description of this video. I know some of you guys are now joining from watching me. You're going to get the Elliott Wave stuff for pennies more. You get Armando for less than $1 a month. If you want to add this Elliott Wave analysis, you're going to pay a little bit more. So it's going to be slightly more than $1 a month. And you're going to get updated on things like the NASDAQ, so a little bit of SP. But there's other members in the Elliott Wave room inside of the Professor Trades Club who are posting quality charts. I'm moderating the room to make sure that we're only looking at what I think are credible Elliott Wave counts, because if you're a beginner Elliott Wave, it takes a long time to get good at this, and I don't want to hurt anybody, so I'm not going to have folks just posting willy-nilly in the room. But there are a couple members that are really good at Elliott Wave. David in particular, shout out to my boy David, woo! And he posts his charts. He's tracking the SPX and the ES pretty much daily with actionable levels. So the point is, join the club. Armando's going to get your psychology right. That's his area of specialty. And day trading, scalping, which I'm also a day trader, scalper. But the Elliott Wave allows you to get a longer time horizon. So you're going to get both in the room. All right, let's get back to the chart here. We're going to finish off with gold and silver and take a look at NASDAQ. I'm going to keep it moving. It's Wednesday. I got kids. I want to get back to my family time. So here's gold. It's bouncing into resistance. I've been kind of like a broken record talking about this blue zone down here because, is this the bottom of wave 4 where that A wave is? It's pretty shallow for a wave 4. Could it be wave 4? Of course, yeah. Anything could happen, but my preference is that this get a smackdown. So wouldn't it be interesting if the dollar continues to grind higher? Eventually, maybe the metals will roll over. But we like to say in Elliott Wave world, each chart on its own. So let me drill back down a little closer. Now you can see I was tracking this as a potential ABC. We made a new high. So this is getting a little bit more complex. It's getting smacked around a bit. The next resistance zone that I think is if they want to come up and grab this liquidity over here. I just don't love gold in this posture. I want to see it roll over. That's what I would love to see. So this made it more complex with these moves here. But the truth is, it's still below resistance. It's still in this box. So is this complex? Yeah, but part of that complexity gives you a clue that it could be corrective. So impulsive, corrective. What comes next is another impulse. So let's see what gold is going to do. I just keep moving these labels over a little bit further to the right because it's definitely burning time off the clock. All right, so let's drill down one more level, look at gold. Just look at this. It already busted through what I was considering as parameters. So at this exact moment, I do not have a trade on gold. If anything, man, I'm leaving gold alone. I was about to start saying if anything, but I don't need to stretch. There's plenty enough good trades in crude oil. There's plenty enough decent trades in the NASDAQ lately. Oil and the NASDAQ have been behaving well for us all of a sudden. The last several sessions, we've been killing it. So gold, honestly, what I prefer to do in gold is just wait. Let's see what happens. If this is going to come down impulsively, I want to wait till I get a legit 5 waves down and then look for a retrace and then sell that. Otherwise, if this comes up and gets above here and comes down correctively, perhaps I would take a long scalp looking just to take it up into this zone here. Just call it 27.20 something, 27.24, let's say. All right, so if this can come up and then back test this where I have this sell box, because forget that it's a sell box, which I did scalp this. I mean, look, I'm a day trade scalper. So when you see my sell box, it doesn't mean refinance your house and go short. It means look for short scalps. So had you been doing that, you would have had plenty of pips to grab from this box. But look at this. If you drag it over, you can see how much price has interacted with this zone. Right? So now that box might act as like it did over here. Let me move it over again. This is really what Armando is king at. Look how this back tested the top of this box and gave you all those pips up to this zone. Look how it rejected this zone here. Is it gonna come up, give you another back test, and then come up again and do the same thing here, get rejected? Look at this. It came up, got rejected, back tested this zone, and then came up, got rejected, came back down, bounced. Look how price interacts with these zones. So one way to do this if you want to scalp long is let it come up and see if it gives you a back test. If it doesn't and it keeps going, I'd rather look for shorts in this area. So I'm staying away from gold more or less. Let's look at silver's kind of a similar story. Looking for wave 4 in silver to come down a little further. This is the daily chart. This is what I've been looking for. Now silver is a little more compelling that wave 4 could be in. Even though I don't like this price action, if this low is in, I would expect to see more of a reaction like what you see at any of these other lows. This structure is not great, but this is the idea. We did nail the top and we did nail some of these shorts, but now it's getting complex in here. It's very difficult, silver. But look at this action: boing, 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 just rejection, rejection, rejection. What is silver going to do? I think it's like waiting for the dollar. Now, I know it's each chart on its own, so I'm not trading based on a correlation, but if the dollar wants to break out and keep ripping higher, this is the perfect place for silver to say, screw it, let's just go down and tag this box. Okay, so am I trading silver at the moment? No. Look at this. This is pretty crazy. Plus, it was news today. Look, silver's a maniac. Silver's a maniac. I'm just staying out of it. My bias is to the downside, but I just don't have an edge right now, so I'm just going to leave it alone. All right, NASDAQ. Wouldn't you know? You notice a theme here with wave 3s on the daily charts, looking for a wave 4. Look at this. Pretty cool. Pretty nice clear channel. Tagged the top, came up, or did the third wave internally. 1, 2, 3, 4, 5. 5 waves for wave 3. Then we got rejected. A, B, coming back down again. Needs to make a lower low. Needs to come back down. NASDAQ. Tricky stuff, man. That's the daily. This would be ideal if it can really come down lower. Let's look at the 4-hour. Tricky business. We have had some incredible trades in the Professor Trades Club. I love it when I'm looking for a certain thing and then Armando posts he's triggering something as well using his methodology, which is much more about supply demand zones. Like, for example, we caught this low. And what I've learned to do from the Professor Trades is when something goes in my favor, definitely take the profits on at least half and then protect the other position and never let it turn into a loser like it would have over here had I now looked at it. Use a trailing stop. Boom. I waited, came all the way down here. I started thinking, I want to get long. And then I saw Armando post a trade alert saying he's buying the NASDAQ. So I certainly did, rode this thing back up, put a trailing stop. The last couple of days, this looks like crap in here, right? But we scalped the crap out of it in Armando's room. We also caught a lot of this move down. This is no man's land, but we also caught this short. Look how many people buy the bottoms. They buy the bottoms. That's what those bubbles mean. Anyway, so I'll be surprised by nothing. I will be surprised by nothing with the NASDAQ. This count, I'm out of pocket right now because I haven't spent the time to really dial this in other than saying my bias is that it bounces a little more. That's my bias really, is that it's some kind of 5 down. There's a bunch of different ways, without getting into the gobbledygook of all the alternative counts. I'll just say this. If this holds this low right here, I'm expecting a bounce to come up higher as a wave two before we get the next smackdown. So you know what? Because we've killed it so much in the Nasdaq, if you must take a trade, I would trade long. The ultimate stop is really this low down here, but I know that's a lot to ask. So what I would do, just quick and dirty, and I'm not using the magnet because I just want to make this quick. If I just want to see where did this pull back to after this top, right? After this high, it hasn't even come back to the 50% level. So it could come down a little more. Let me put on a different fib set. My blue fib set is almost always for wave fours. My grays is for usually wave twos is my grays. Wave twos come deeper than wave fours. So, honestly, this kind of looks like, man, I don't have a lot of edge right here, but uh, it's possible this hasn't concluded 5 up yet. So it'll come up into here. Yeah. So these white fibs are no longer valid. Uh, so the real question is, I'm sorry guys, you're watching the sausage get made by me adjusting these in real time. So, but if that's a 1-2, let me get rid of that. So if that's the 1-2 already, 1-2. Yeah, it's funny that zone. I love it when the zones just naturally line up with fibs. Like I didn't know over here that this zone was going to be right where the 1618 is over here, but it is according to this structure at the moment. So this looks like a low of sorts. So it's possible this already is wave two, in which case it looks like this in Elliott wave speak. 1, 2, if but really what we'd be expecting is a corrective move, 5 down, 3 up. So let me measure it like this. See, that's not really enough. Sorry, you guys are just watching the speculative aspect of LA wave because we don't know the future, but this should be moving in 3 waves. So if this is an A wave, B, then let's see if, well, we already know it's going to be somewhere around that same zone. Yeah, so the 1382 comes in right there at that same zone. So if this is going to come up correctively, I mean, I still think it's worth scalping to the long side because your options are either the top is in, or this is just going to bounce. Excuse me. Either the low is in, and we're going to keep coming so you can get that 5th wave higher further into 2025, or it needs lower. I think it needs lower. So I'd be thinking this bounce coming up is corrective, in which case it should make a U-turn somewhere in this area, and we'll be able to dial it in a little better once we have a little more price action. So I'm just gonna put a question mark, a yellow question mark, indicating whenever you see yellow, I'm looking for a correction, which means moving in 3s. This is an impulsive wave down, I think, in 5 waves. So we're looking for an overlapping something moving in 3s that comes up into this zone somewhere, and we'll be able to get a little more information. So if you want to be long, I mean, this is not a terrible place to go long. Actually, right here, and if you want to have a tight stop, you can just below that last low. But over time, what I've learned from the professor, meaning Armando, is trade smaller and use wider stops. Now, I like to use stops based on structure, but let's just say if you feel compelled, like you have to take a trade, the minimum that this should bounce is to that 100 fib at 21,500 ish. So, and a tight stop would be like that. Okay, a tight stop would be like that. So, but a real stop based on structure, honestly, would be all the way down there. That would be like the real stop based on structure. But that's the P&L. I guess it's not horrible, right? What is that? Three. Yeah, the risk reward is not horrible, even doing it that way. What you could do is go real small long, and if it comes down, add another small position and define your risk in advance and ask yourself, if I added 3 positions as it comes down, how much would I lose if it broke this low? Like if you predefine your risk at $1,000, then your first position has to be small enough that if it goes against you, you're only risking $300. The second position, same thing. You buy it lower so it could be slightly bigger because you have less risk, but it still should be $300. I'm just using this as a hypothetical. $1,000 risk total, divide it in thirds, and adjust your entries accordingly. Because then, if it plays out, you're riding up all 3 positions, but then you're going to take off a third here, a third there, and the final position for the Yahtzee. So that's just a trade idea. Okay, go long now. You define your risk, but that's just the idea. Cool. So that is the NASDAQ. Really, no need to look at much else. I'll just give you a little bonus. S&P, I don't trade this. David does in the room, but the idea here is, yeah, you can get a little bit of wiggle of an upside, but see some rejection. And to really finish this off would be to breaking this. That's why I have the sell box here. Coming down and getting a 1 hour, at minimum 1 hour candle close. And if you really want to be conservative, let a 1 hour candle close somewhere down here and then sell the back test. If you want to be aggressive, as soon as this breaks the low, put on a small position. Then if it comes back, keep adding to your position. And with a minimum target of 56.69, which is at the top of what I'm calling this pivot zone of a larger degree. Not going to get into that because I don't want this video to be too long, but this pivot area is taken from a much larger structure. But in Elliott wave world, that pivot zone is important. It's still in play. So if this wants to come down as a wave 4 and get down into here, fine. But here's your short trade. You either short it from up here. Look, I'll put a little box up there. Just, I don't know if it's going to come up here or not. But if it makes a new high, I would change my thinking. Meaning locally, even if it pops above that level, my thinking is going to be different about this current structure. So if it comes up here, you short it, or if it doesn't make it up there and it comes down here, you short it. I mean, if you have to go long, well, this is the SPX, so it's not even trading right now, but in the morning or whenever this starts trading again, if you have to look at the ES though, if you have to be long, in the open, if this does, look at the ES for your guide, but if this gaps down, I still wouldn't short it. That's for sure. I would try to trade the gap close, but actually maybe I wouldn't. I would just wait. Regardless of what this does in this region, I would wait until it gets down here. All right, that's the SPX. So I think I pretty much covered everything. The dollar is really the one to watch. The Nifty 50, it's always fun to watch this thing getting beaten up. We nailed the top with those 2 boxes. It actually quite nicely tagged the top of this box and just poked above it and almost tagged the bottom of that next box. Those are 2 different degrees that I was tracking, and it kind of nailed both of them. So that's confluence. So that's high probability short. I was posting that in the room, but we don't have a lot of guys doing Nifty 50, but I kind of still track it. And it's coming down and tagging my levels. It's behaving well from these levels. So I can just update it a little bit I can see this level right in there. Call it head and shoulders. So maybe it rounds out a shoulder a little bit and comes back, but I'm bearish on this thing. Unlike the S&P and a lot of these other things where I'm showing you the top is a wave 3, like this over here, it already got its wave 4, like in a day. So I think this has topped already, like for I don't want to be too dramatic, but potentially years. But it doesn't matter what I think. We're trading Fibonacci. All right, cool. So guys, thanks for watching. Listen, if you're new and you're getting value here, and you want to keep getting value, go ahead and like, subscribe, hit the notification bell so when I post these videos, you'll get a notification. All right, guys, join the club, man. For less, well, if you want to get both Armando and Elliott Wave for just a little bit more than $1 a day, you're getting both. It's a no-brainer. The link is in the description of this video. Thank you, guys. I love it when you guys buy me a coffee. The link to that is also in the description. I just love it. Thanks, man. See you guys in the room. Take good care, and whatever you do when you're trading futures, don't get killed, please. All right, thanks. Bye-bye.